why people are very bearish. And usually the tendency is when a quarter finishes, we manage at least to identify half of it and then move the other part into the next quarter. Now, of course, everybody knows now what was the expiry, what was doing. Yeah, China didn't take this sugar for new consumption. Their licenses were finished already. 3 million tons for out of quota, 1.94 million tons for in quota. Out of this in quota, about 100 to 150,000 was white sugar. Only the remainder was raw, so on and so forth. So they moved this surplus into Q1, Q2. Because, I mean, like, okay, taking the Brazilian and moving it to China and China doesn't consume it, this is still a surplus, right? So that's the situation on rose. But if prices now, I see they are correcting, maybe some other people will step into the market. We don't have to base ourselves only on China buying. Indonesia could buy, refineries start buying a lot of sugar now because Ramadan is on the at the middle of February, right? So they start procuring sugar, and then refineries in the Middle East were hurt in the market. They bought Brazilian. So let's see if we manage to solve this. We go into a more constructive pattern. Now on whites. On whites, this is the situation, let's say, previously to the allocation of ethanol into India. You know, they had a tender and they allocated less than expected. So what the white sugar net trade flow shows us, that there is on Q4, there is still a tight situation because of missing Indian product. Brazilian product crystal is still in the market, but is not at the level it used to be in Q3. And then Brazil now will finish with the crop, so on and so forth. It will be less and less crystals in the market. So market will need crystals from another origin, which is of course more expensive, right? And on the cumulative net trade flows on whites, we have kind of a balanced situation, a bit of shortage in Q4, Q1. Now that's the combination of low quality whites and high quality whites. If we look now on low quality whites only, we have a bigger deficit on Q4. Okay, it's not a big deal, 300,000 tons, but still you see that cash premiums, they are holding well still for crystals in Brazil and all over the world. And we've heard people now asking for crystals from other origins than Brazil, right? So the centrals and so on and so forth. But the thing is this, okay? Q4, Q1 on crystals, it's tight, a bit tight, not much. But from Q1, middle of January onwards, we are already considering in these numbers Indian exports, okay? India, in our numbers, is 1.8 million tons of low quality white exports. Among these, between 200,000 tons and 300,000 tons are alternative exports, not to say smuggled, into the neighboring countries. This always happen, right? So Bangladesh prices are high, much higher than the Indian prices. This sugar will find a way to go there, maybe not more than this. It used to be 850,000 smuggled, but now the governmental policy is like, okay, some deterioration of relations between Bangladesh and India, so they will start to control more this. But 1.8, remember, are here already. The problem with 1.8 is we don't know if this will really happen due to prices. If prices in India will correct, yes, will happen. Otherwise, not. On high quality, here we put the tolling refineries, right? So high quality whites is also balanced. And then on cumulative, we go into a surplus. Why is more balanced now? Because we have more European into the market. Unfortunately, Europe is selling at London flat. That's very low for Europe. Just as a reminder, European prices used to trade about 6 weeks ago at about 640 euros per ton delivered in North Italy, and they collapsed and they lost about 100 euros in just 5 weeks. So then now they are below production costs all over Europe. We've heard some offers in for the European market. We have some offers in France and Germany at 490 euros, 495 euros, even below. So that's very low. They are losing money. Same happens in Ukraine. So Ukraine, I've heard an offer at $420 ex factory. That's very low for them. Some people said in Ukraine we have production costs at 450, 470. Some said we have a 400. But they are at the limit. So everybody's at the limit now, right? So for how long this situation will continue with producers like at the limit, and Brazil still in the market producing sugar that could be sold at 14 cents. Now, what if India manages to export more than 1.8? Let's say 235. Why we say 235? Because that's the difference between our previous number considered for ethanol and the new number, right? And then of course, if prices are correct, if the market is going up to the level of Indian parity, okay, they could export more. Or if domestic prices collapse to 32,000 rupees, then okay, they can export more. Not now. And then how would this change the full balance? So we will have on low quality wise still a bit of tightness in Q4, but then we start to grow, right, from Q1 to Q3, and then on all the whites, we will have surplus going forward. It's very sad to say this, that at these prices we have some surplus. Now, the VHP and hypo cash premiums, we analyzed here, so the blue line is the 2nd of August, the black line is 17th of October, and then we go forward with them. So we still see, you see, all these indicate that, okay, the bearishness remains there, but there is a hope that going forward, we will have no discount to New York 11. Also, prices collapsed. Now, some people said that I would expect that this 1 million tons of raw sugar surplus in Q4 to see this discount higher than 40 points to New York, maybe at 60 or 80. Yes, I agree with that. Should have been higher, but the thing is that New York corrected too much. So we are talking here about flat price, not necessarily about cash premiums. So we are already too low. And then here we see that, okay, usually the cash premium is negative in Brazil between, let's say, June and November, and then it tends to recover afterwards. But what we see now this year, it's not really encouraging. And the same happened in Thailand. Those are the cash premium these years, and all the quota B tenders now were lower and lower, right? So they have to be happy with a premium of 80 to 85 or even below 80 points to New York 11, when in other years they have 250 to New York 11 premiums, right? Or 200 or 150. So they're also struggling, right? Now, let's talk a bit about specs. People, they don't really talk about specs, but they are very important. And then, okay, we've seen, yeah, their position is quite heavy on the short side. They had other years when they had a heavy position. And here, for example, this chart shows us their position from July 23 to September 25. But here we have March 17 to May 20. So a larger span. And you see here, when they consider that the market is bearish, and they remain in a bearish position, selling the market for a long period of time. So from, let's say, May 17 up until November 19, they were bearish, and they sat on good shorts, right? So from about 100, 150, down to 250 short. Now they are not so big, so they can reach 225 short, but the problem is we don't know for how long they will maintain this position, right? Because they have a huge impact on prices. Let's say if tomorrow they will execute all this position and they will decide to go bullish or decide to go flat, it would be a very big impact in prices, right? So we will have maybe more than 2-3 cents of a rise in prices. So they have an important role here. They give liquidity. We cannot blame them for bringing liquidity to the market, right?